In this video, we're going to talk about the housing market. This is going to be a housing market crash video in parentheses, and you'll see why that is shortly. We're going to look at data. We're also going to look at what 2024 will possibly bring us. So there's going to be a prediction portion here, and then how you can prepare in order to win in this market. Now, I will tell you that I'm going to be as honest and frank with you. I think it's important to be really realistic about what's going on so that you can make the best decision for you. Now, if you're new to my channel, my name is Katrin Fitzgerald. I'm a real estate broker associate in Sarasota and Manatee County. If you enjoy this type of video, please like it. Think about subscribing to this channel for Florida related information, especially as it relates to real estate. And we're going to get right into the data review to see if the market has crashed or not. The first chart I'm going to point out is the Case-Shiller U.S. National Home Price Index, which essentially is an index that looks at composite of single-family home prices across 9 U.S. Census divisions, and it's calculated monthly. A lot of economists will say that this is one of the most precise price index to look at. The latest data point I have here on this map is June 2023. And we're going to compare it to same time last year, because that's what we want to do. We want to see how it shifted over the same period the year prior to determine is it up or is it down. And so if I move over to June of last year, it's essentially the same, 308 versus 308 of this year. And so looking at this price index, the market hasn't crashed, right? Now, as you can see here, there's a period of time where it definitely went down, which coincided with the mortgage interest rates going up in Q1, Q2, Q3 of last year. But also there's a lot of seasonality built into it because prices typically always will be higher in the spring season, and it typically always comes down after the summer because less people are in the market to look for a home. There's going to be some states where the prices actually have gone down year over year, but on a national basis, the prices are holding. And let's see what's happening in Florida. We're going to tap into Sunstat, which is a portal from floridarealtors.com. You won't have access to it, but me as a real estate agent, I do. Looking at the July 2023 numbers, the median price in Florida right now for a single family home is $415,000. Let's compare that to July 2022. It was $412,000. So the July numbers are actually higher than they were same time last year. Now, in order to determine whether our market is crashing or not crashing, we're going to want to look at the monthly trend, but also the yearly trend, because if the median prices are trending downwards, it doesn't necessarily mean that the prices are crashing because A, you've got seasonality, and let's just say we're in the fall season, the prices will right now most likely than not go down a bit from where they were in the summertime. Seasonality is built into it, but also the mortgage interest rates are now over 7%, and so there's far more people out on the sidelines that cannot afford a home or that are just waiting until next year when it's expected that the mortgage interest rates will come back down. And so that's what's going to put some downward pressure onto the prices on a national basis, and I expect that to happen in Florida as well. But I do not expect there to be a crash. And looking at these numbers, you can look at these percentage change year over year on this map here. Not once have we been below same time last year. So anybody who says that the market is crashing in Florida is not telling you the truth. They're not. It's not crashing, okay? And if we see numbers go down by maybe 0.5%, maybe even 1% versus same time last year, it doesn't necessarily mean that the market is going to crash because of seasonality and also because of the mortgage interest rates, who are expected to come down eventually. The current situation is so different than it was in 2008. First of all, let's look at what dictates prices in the market, right? And it really comes down to a really simple economic principle, and that is the principle of supply and demand. That's essentially what dictates the prices. We're dealing with a shortage of homes on the market. Now, some news articles will say the shortage is 4 million homes. I've seen some articles say it's 6 million. 7 million, whatever that number is, it's going to be in the millions more likely. And it's not a number that can be easily negated. There's a couple of ways where supply can hit the market, and that is if more people are listing their homes, which currently they're not doing because many of them are locked into really good mortgage interest rate, and so they're not willing to trade that off for a 7% mortgage interest rate. It just wouldn't make sense. And from the last data points that I've gathered is that the majority of the US population that have a mortgage that is pretty good, right? It's below 5%, in some cases 4 and even 3%. So why in their right state of mind would they let go of these mortgage interest rates and then buy a house at 7 or 7.5%? It makes no sense. And so that's one of the reasons why there's just not enough homes in the market. The current situation isn't really expected to change much. For there to become more supply in the market, you would have to have more people list their homes. And we talked about why that's probably not going to happen anytime soon. Then you've got new construction. So builders building more homes, and they are, but they're not still building at the same level they were in 2008. Let's talk about inventory. So back then in 2008, the inventory on the market was approximately 4 million. This cycle, it's approximately 1.2 million. So there's far less homes on the market than there were back in 2008. Plus in 2008, it seemed like almost anybody was able to get a mortgage. Anybody who wanted a house was able to get a mortgage. In today's world, it is so much harder to get a mortgage. Distressed homes, minimal when we compare it to 2008. The high inventory and the number of distressed homes back in 2008, it's what helped propel the market into a crash. And we don't have those two fundamental issues right now. Plus, we have more demand versus the supply that's on the market. This is the way Lawrence Yun put it, who is the chief economist for the National Association of Realtors. He said there are simply not enough homes for sale. And I think that is the easiest way to put the current situation that we're in. So the next question is, who's actually able to afford the homes in today's world, right? Higher prices, higher mortgage interest rates. Well, there is a segment of the population who's able to afford it because otherwise the prices wouldn't be where they are and homes wouldn't be selling. They're obviously selling. And so who is currently buying these homes? If we look at this chart here, it essentially showcases from a demographics perspective who's purchasing it. And you can see that a big chunk of them are now baby boomers. They've actually overtaken millennials back in 2022. So as the mortgage interest rates rose, the millennials starting taking a step back because they were starting to get priced out of the market, but baby boomers who've had all their lives to save up, be able to build wealth, are now able to come in still and purchase these homes. And that's really who is a big chunk of today's buyer market right now. And then of course there's investors, right? So if we look at data points from Q4 of 2022, 18% of homes that sold in the fourth quarter were due to investors. A big chunk of the offers coming in are due to cash offers. In Florida, depending on the month out of the year, it could be 30 to 35%. This article says it perfectly. Baby boomers and their cash are driving the housing market right now. It's absolutely true. I was in a few situations just recently doing a comp analysis for a home that one of my buyers was interested in, looking at the last 90 days, 180 days of comps. Almost all the homes that had sold during that time period were sold utilizing a cash offer. So a lot of cash offers coming in across the United States, and that is partially driven by the older generation who again has had plenty of time to save up. So where are prices headed in the future? Well, let's see what Barbara Corcoran says. And she says that housing prices are going to go through the roof as soon as mortgage interest rates come back down again. And I agree with her because I see just boots on the ground feedback that I'm gathering, especially in the Florida market. Now, again, talk to you real estate agent if you're outside of the Florida market. But I do see that there's still so much demand in this market here, and I can absolutely see prices going back up again as soon as more of the millennials, more of those people who are creating new households are able to actually afford purchasing a house. And so now let's look at what major economists are actually saying about home prices in 2024. Lawrence Yun, who is the chief economist for the National Association of Realtors, he's predicting that prices are going to be up by about 3 to 4% in 2024. And this is as of a prediction made back in August of this year. Let's look at CoreLogic. CoreLogic is saying about 4.3% next year. Well, actually between June of 2023 to June of 2024. Freddie Mac is saying 0.8% in the next 12 months, and then an additional 0.9% over the following 12 months. And that's as of August 2023. Zillow is saying 6.5% from July of this year through July of 2024. Fannie Mae is actually saying minus 2.2%. Goldman Sachs is saying plus 3.5%. So the key takeaway of this chart is that the majority of the economists looking out into 2024 are far more optimistic than they might have even been back in 2022. And the majority are not predicting that the market is going to crash. They're just not. But that beckons the question of why so many news headlines are still painting this grim picture and the market is just about to crash. Look at this one data point that is hinting at a crash because it's what happened in 2008. It's just so much negativity that is still being built around the real estate market. And as a former marketing professional, I can tell you that there's essentially three main things that really sell advertisement, a news headline, that is sex, humor, and drama. And the negativity really falls within the drama category. We're just programmed as human beings to really focus on what's negative. And so that creates a higher click-through rate when you're clicking on articles online. It really catches your attention. And unfortunately, a lot of the crash videos on YouTube can garner a lot of money. There's a lot of YouTubers who are really exploiting that situation. And I think at this point, they're almost hoping that the market is going to crash because they've been talking about a market crash for the last 3 years. Instead, this is actually what I had to say in 2021. So I would say that if you've dreamed of living here, but you're waiting for a market correction, you may be waiting for a long time. And then the question is, what will that correction look like? Now, purchasing a home is a stressful event, right? Because there's a lot of money on the line here. And yes, what if the market does crash? But what if it doesn't crash? Because the prices are so much higher and because the mortgage interest rates are so much higher, I think now is the opportunity to not complain about how prices have gone up so much. The situation is one that is what it is today. And I think the best way to look at the future is to plan ahead and to expect the market to continue to appreciate. So what you're going to want to figure out is, how can I save money so that I can purchase a home in the future, whatever that time is, whether it's in a year from now, 2 years from now. You have the power now to really strategize and determine how you can get to home ownership if that's what you want to do. Some of you may actually decide that investing in stock is a much better option and I'll just continue renting. But if you do want to be a homeowner, plan ahead now, save money, get that better job, spend less money, look at a different destination that's more affordable, look at a home that is smaller, more affordable in nature. You can always scale up later once you've built home equity. Plan ahead, that's my advice for you. Let me know what you think about the real estate market. Do you think it's going to crash? Where do you think it's going to crash? Where is it going to continue to appreciate? Leave us a comment in the description section. I do read the comments all the time, and a lot of the subscriberships get a lot of insights from it as well. Now, if you're somebody that's new to this channel, thank you for watching today. I appreciate it. If you're a returning subscriber, I always appreciate you guys as well. If you're looking to purchase or sell in the Sarasota, Manatee County area where I work in, call me, email me anytime. I love hearing from all you guys. Thank you again. I truly appreciate it. Take care.